Yeah, I mean, I would ask you a couple of questions. I would say, what's your goal and what is the 401k? So are you investing only in your 401k? And what does that structure look like? Is it that you've been at one company for 20 years and it's the same one? Have you bounced around a bunch? Because you may be able to unlock some of that money that you already have in the market. And depending on who your advisor is or how you're structuring it, you may have access to a lot more than you think you do. So you may not have to come out of your savings. You may not have to come out of your quote unquote pocket to start investing in some what they call alternative investments or real estate. It could be interesting for you, but I guess the question would be liquidity, bringing it back to that. So the one thing that we say about syndications is you are going to tie your money up for probably 5 to 7 years. There is a return on the back end of that. If we do our job well, we think we can make you around, 1.8 to 2x on your money is usually what we shoot for.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey folks, welcome back to the show. Today's guest is based out of Golden, Colorado, and along with his brother is the founder of Wild Oak Capital, where they focus on multifamily syndications. Please welcome Ben Nelson. Ben, welcome to the show.
Great to be here. Thank you.
I always like to start off at the top, Ben, by asking folks how they got into real estate.
Yeah. So I came through action sports. I produced action sports for about 15, 20 years, somewhere in there, all around the country and around the world. What that means is, Red Bull was a main client, Nitro Circus. We became well known for producing some things that were harder to build, right? So we raced off-road short course trucks in Maine in the wintertime and, a couple of world records, things like that. It was a lot of fun, but ultimately realized that I was trading time for money in a pretty big way, and it wasn't going to get better, right? Like the future didn't hold me being on the road less if I kept in the direction. So I had a lot of conversations with my brother Eric, who's the founder, and he said, we both were kind of trying to figure out the next move. He was an engineer by trade and kind of felt the same way. We were doing the calculus of, how many years is it going to take with a 401k and dumping in that to actually have a quality of lifestyle as a retiree,
Yeah.
right? And the math just didn't work for either of us. So he had a couple of small single families, and so we started looking at some stuff. And he and I ended up buying 2 quads together in Lubbock, Texas, to get our start, along with a JV partner that we put in. Kind of the classic story, like we'll do all the work, they bring a little bit of money. We didn't have substantial amount at the time, and so that's how we got started, and just kind of got our hands dirty. And then from there, realized the volume of energy we're putting into 8 units is probably very similar to the volume of energy you put into a much larger complex. So started looking at syndications and things like that. And credit again, Eric, he's like, hey, I think we should go for this. He had a mentor, his name is Jens, that we got to know really well out of Durango, Colorado, who was really interested in the syndication game and kind of gave us that leg up and KP'd for us on the first couple of deals. Then we kind of hit the ground running. We partnered with some other really smart folks. Shane and Bonnie are also on our team, and just have been able to work well together. We try to be really conservative. I know that's sort of a buzzword, right? When it comes to the syndication game, a lot of people claim to be conservative, but knock on wood, we've been really fortunate in the sense that we secure fixed rate debt for the most part. We're really conservative in our underwriting, and we try to do right by our investors. And we've been successful so far. We're just over 1,000 doors and 100 million under management, which I know, again, those are sort of buzzwords, but it's it's nice to be able to see some growth and do it in such a way that we can look each other in the face and say, we think we're doing something good for the communities.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
Good for our investors and have a really solid trajectory for the future.
So syndication deals are tricky for a lot of reasons. You've got to raise the capital, you've got to find the deals, you've got to keep everyone happy. Did either of y'all have a background in raising capital prior to getting involved with real estate syndication?
Raising capital specifically, no. But I don't think that it's a lot different. Once you get past that sort of initial, I mean, I'll say it, like I had imposter syndrome to start with, right? Like I was very good at producing, but real estate was a new game. But I think I'll speak for myself, once I got over that the differentiation, people are people. And at the end of the day, having the ability to have a really strong conversation about what we're trying to do, why we're trying to do it, we've found that there's a lot more capital out there than people realize, in my opinion. So I also had a lot of help. I met Hunter Thompson early on, who's really involved in capital raising, met some really incredible people through his network and his program. And just truly, it wasn't about figuring out necessarily how to raise capital, it's how to change the conversation to where, we still want to raise money from people that we want to be around, right? Like that's our biggest differentiator, I think, is how we speak about our investing and our investors. There's a lot of crowdsourcing, there's a lot of crowdfunding. Syndication at the end of the day is just pooling people's money together to buy larger assets, right? Like at a very basic level, that's all it is. So finding people that you get along with, that you want to spend a little bit of time with, that's our goal. So we limit our pool a little bit in that sense, that we're not going out and just like anybody who has, an internet connection and a little bit of risk tolerance is like investing in our deal. We're not necessarily looking for that. We want to work with people that want to do life with us. We're adventurous by nature. We grew up in Southern Colorado. We grew up in the mountains. So I've met a ton of investors on a ski lift, for example. Eric's involved in a couple of different organizations, and I know he's been on surf trips and picked up investors. So that's really where we're focused. And to lead back to your question, we had to learn it, but at the end of the day, as long as you can have an open and honest conversation with people about what you're trying to do, people are incredibly receptive to it.
I want to ask you about getting into the underwriting of these deals and how you're looking for deals and how it started. You mentioned 2 quadplexes, but going from another industry entirely into that, and you mentioned your brother's got the engineering background, it does take a shift in both mentality, but also identity, right?
Yeah, yes and no. I mean, at the end of the day, budgets are budgets, right? Like, so underwriting is essentially a giant budget, right? So, and I won't lie, like I'm a producer by trade, so I'm like an action taker. I'm one of those, like, we're going to do the boots on the ground. So a lot of that asset management program. Bonnie is an excellent asset manager. Fortunately, Shane is also an engineer. So Shane and Eric have this mentality and this brain power when it comes to math and underwriting. They see things that are awesome. I'll give credit to them. I can underwrite, but they can underwrite way faster than I can, right? So it's more about how do we ask the right questions, in my opinion. Like, underwriting is also really easy to manipulate, right? Like if you're looking for a certain IRR, you can bump, oh, I think we can get X rents, or I think we can do this, or I read it on the pro forma, or Crexy thinks that this market's going to bump up by, X, Y, and Z, or the cap rate's going to compress 2 points. And I've seen that lately in underwriting.
Yeah.
People send me something, we'll see a pro forma, and it's like, dude, there's no way that this is reality. So at the end of the day, it's more about, can you ask the right questions of people? It all comes back to people again. Like, the spreadsheet ultimately is about what people are willing to pay for their rent, right? What people are willing to pay if you fix that property up a little bit. And what does the people on the ground who actually have to execute this business plan, so in our case, our property managers, what do they feel about it? So we bring people in early. We've built some really strong relationships with our property managers in the markets that we work in. When we start looking at properties, we start underwriting properties, we do it alongside our property managers. So we underwrite independently. We ask them to do the same. We asked them to poke holes, go see properties, things like that. And at the end of the day,
if you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
We understand that we have our number, they have theirs, and we're starting to put a lot of these budgets together. But ultimately, it's about the people and the reality of like, can they manage in that way? Will people actually pay that dollar amount for that space? And are we doing right by the tenants, right? Like if I come in and just replace countertops and all of a sudden bump rents by $200, probably not doing right by the tenants. Yeah. So reality and bringing like the real actual functioning ability into that underwriting, I think is the hand in hand. Anybody can make a spreadsheet, man, but it's a lot more, there's a lot more behind it to actually make that work.
I want to ask you about what asset class or asset classes your team is looking at when you're looking at deals. Is there a specific asset class or asset classes of real estate that you're looking at investing in?
Yeah, so we're pretty firmly in the value add space. So, B minus, C plus zone, mostly because for two reasons. One, we still think there's meat on the bone there. Yes, it's harder. Yes, again, it's like this buzzword. There's this ebb and flow in the cycle. And I think that we're in a really interesting space right now for that. We've seen a lot of the quote unquote competition move to different spaces, whether it be energy or whether it be, suddenly everyone wants to buy a business and flip a business, right? Like that's the thing. We're firmly in that value add space and we're going to be there for a long time for a couple of reasons. I think, the size of those assets that we're looking at, we're probably maxing at around 200, 250 units and anywhere down to like, 80 to 100 that makes sense. And usually it's in that sort of workforce housing, family housing, people that it's an affordable place to live and people are going to work on a daily basis. So we can lift up those communities. We can do a lot of good. We can put a lot of meat on the bone for the investors and have those honest conversations we were talking about. Like, hey, I know you guys have been here and say you've been paying $50 a month for rent. Would you be willing to pay 75 if we fix all the problems, if all the roofs suddenly get fixed, if the staircases get fixed, and maybe you get a dog park or a playground or something like that? It improves how they live their lives, right? So that's the biggest thing that we do. We go in and we fix a lot of these things that are deferred maintenance, or maybe they're made some promises early on. Lately we're going in and picking up some things from some folks that maybe got overextended, and we can solve some problems. So we feel really good about that. Like we're helping people with their problems as we go along as well.
You're nicer than a lot of folks. I lived in places in Texas. You mentioned Lubbock. I was in San Antonio, right? South Texas. And they would just raise your rent by like $75 to $100 a year or more than that, like clockwork. And I never even thought about questioning it. I said, well, I guess this is what I'm going to pay now. But looking back, of course, it was a good deal for them. I want to ask you about some of the areas that you're investing in. I know you're in Colorado, but you looked at those first two, I believe it was quadplexes you mentioned in Lubbock. Are you keeping an eye on sort of the middle and Midwest United States or on the coasts, or is it really anywhere there's a deal?
No, we're pretty focused. I mean, we talk about this a lot. Eric and I talked a bunch, and we were just on another podcast, and kind of the thesis behind where we invest is twofold. Number one, we've built some really strong relationships in the sort of North Little Rock and Northwest Arkansas space and Oklahoma, specifically Tulsa, outlying Tulsa, and then up into Oklahoma City. We are as close to vertically integrated as we can be with our PMs there. They're excellent people. They're super, super smart. They've got amazing teams. So like I said, we underwrite and be with those guys. I think the other part of that is that it's also affordability for the ability for us to make some dollars for our investors. The cost of living is less. The ability, the basis to get in is less. The delta there just makes more sense. We're interested in looking at some deals, but we're really focused on sort of on the middle part of the country. So not necessarily the Midwest, but a little bit south of the, intense freeze thaw situation that you have. We're staying away from the East Coast and Southeast just for the reason, like hurricanes. Unfortunately, like insurance is ridiculous.
Yeah.
There's a lot of those type of things. California is interesting for people who live there, who can invest there. I know there are people making money, but just the tenant and landlord laws there, plus the cost of doing business. It's almost like being in Colorado as well. Like we invest very little in Colorado, mostly just because it's not affordable to do so without a serious capital stack and a long-term vision for that money.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel.
Most people we're working with, we're looking at 5 to 7 years probably on the exit, which is still a long term.
Right, it is.
But this allows us investing in that sort of middle space. So like Arkansas, Oklahoma, that zone allows us to provide a really solid return, do a decent amount of good with the dollars that we have. Like the dollar goes farther to do a lot of good on that property. And we know that we can work with the people we already know and trust.
I want to ask you about finding investors and then also the avatar of the investors. You mentioned that you've bumped into people on ski lifts, right? Are these people seasoned real estate investors? Are they people from all different walks of life, maybe outside of real estate? Is there a central avatar of someone that invests with you? Are they involved in like outdoors life as well?
Yeah, I mean, I think it's interesting in the sense that we are a little bit different because we have, like Shane, for example, is an oil engineer, right? He lives in Houston, Texas. His avatar, the people that he's around all the time, is a little bit different than, say, mine living in Golden, Colorado. Or my brother Eric recently moved to Spain. Like he lives in Spain full time with his kids. He's got 2 young kids and his wife. They live south of Barcelona. So a lot of the folks that he's talking to are a little bit different. So there's not necessarily one Wild Oak avatar. I'd say the people that I talk to the most are a mix of sort of this like entrepreneurial business misfit kind of mentality. A lot of people really like what they're doing. So like a lot of creatives, a lot of entrepreneurs, a lot of first time investors. There's also a lot of seasoned investors. What we're trying to do is basically find a place for people to say, hey, this makes a lot of sense for your life. Take a look at this from a tax benefits perspective, from a liquidity perspective over the long term, things like that you want to build in for who you want to be. Come invest with us a couple of times, figure out if this makes sense for you, but we can show you why we love investing in this space. So, it's all over the map is the short answer.
I have a granular question, maybe give away some of the gold, Ben, but not all of it. But let's say I'm bumping into you on a ski lift and we get to talking about syndications, and I may be familiar with the term, but I'm not involved in real estate. And I'm thinking, yeah, I'm interested in getting in, but I really know nothing about the space. And I've got a 401k and I do some very much passive investing in that, but it's really managed by a third party. I don't really handle any of it, but I am interested in learning about potentially getting involved in real estate. Do you think it would be a fit for me?
Yeah, I mean, I would ask you a couple of questions. I would say, what's your goal, and what is the 401k? So are you investing only in your 401k? And what does that structure look like? Is it that you've been at one company for 20 years and it's the same one? Have you bounced around a bunch? Because you may be able to unlock some of that money that you already have in the market. And depending on who your advisor is or how you're structuring it, you may have access to a lot more than you think you do. So you may not have to come out of your savings. You may not have to come out of your quote unquote pocket to start investing in some what they call alternative investments or real estate. It could be interesting for you, but I guess the question would be liquidity, bringing it back to that. So the one thing that we say about syndications is you are going to tie your money up for probably 5 to 7 years. There is a return on the back end of that. If we do our job well, we think we can make you around 1.8 to 2x on your money is usually what we shoot for. There's a different return metric for everybody. But if that makes sense, then let's have a conversation. A lot of this is also passive. So when we syndicate real estate, you're talking about passive. You're not an active investor for the most part, unless you want to go to the GP side. Somebody I meet on the chairlift saying, do you like what you're doing? You have kids, you not have kids, are you traveling a bunch? This is a passive investment as well. Basically, we'll take this over, and the lion's share of the risk as far as legal is concerned is shielded to only us. You're shielded as a passive investor, aside, like you don't have to worry about the people falling and slipping on concrete or whatever else that might be. So it's not a hard conversation if people understand that A, it's an investment, but B, hey, we'll walk you through this, right? Like everybody's smart enough that we've talked to understand the basic, like, you can't buy an apartment building, like an 80-unit building, on your own. But together with 15 other folks, we all can own a part of this and actual ownership. It's not like a REIT. You'll get all the tax benefits on the backside, and we'll walk you through it. And that's usually when we'll set up another call. It's like, great, let's go skiing. If you're interested, awesome. We're also in the position where we're like, we're not trying to convince you to invest with us. Like, if you're interested, we'll show you why it makes sense, and you want to come with us, awesome. We'd love to have you. We're going to ask you a bunch of questions. We want to make sure that you fit with us as well. But we're in no hurry. Like, ours is a long-term process.
Ben, we are coming up on time here. Where can folks go if they'd like to reach out to you or learn more about Wild Oak Capital?
Yeah, you can find me. I'm pretty active on LinkedIn. So find me on LinkedIn. There's a Ben Nelson 303. A little bit on Instagram, but not too much there. Or you just go to wildoakcapital.com and check us out and shoot us a note. We'll get back to you.
Thank you so much for coming on the show here today, Ben.
Thanks for having me. Appreciate it.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.